Good morning, Kevin.
Good morning, John. Happy Wednesday.
Another one of those Wednesdays. We are mid-month now. Hey, I hope you guys had a fantastic Valentine's Day with you and your sweetie.
We did, although technically we don't celebrate Valentine's Day other than maybe a Happy Valentine's Day. We kind of see that as a Hallmark holiday
It is, right?
for the non-true romantics.
There you go. There you go. You guys buy houses for each other.
We got stuff for the kids though. We gave the kids.
Oh, good. Okay. All right. That is pretty cool. That is pretty cool. Well, today is February 15th, 2023, and glad to have you on this call again today. We are here to share information about mortgages and real estate, help people make smart choices and avoid costly mistakes in the home purchasing environment, and potentially talk about investing. And there's all kinds of, we get into all kinds of fun topics when we're getting into these calls on Wednesday mornings. We don't always come into it with a specific, sometimes we have a specific topic that we're talking about. Today, I kind of wanted to just dive in a little bit to the subject matter du jour of what's happening with inflation, because we got some inflation news and it haven't had an impact on interest rates today. I'm going to share my screen over here just because that will kind of shed some fodder on what we're talking about. So on my homepage, on my website, I've got these feeds that come in that just show today, these are just live feeds coming in. And one of the feeds I get is the Mortgage News Daily. And
that's cool, John. I like that.
I wanted to just kind of bring this out. So this is not my published information. This is information that's out there on the interweb for anybody to refer to. It's a good reference information because it does refer to a lot of what's happening with inflation, and then I've got links to inflation tools and other stuff. But the real news of the day is that the 30-year fixed rate mortgage average for interest rate across the board today is a little higher than it was earlier this week. In fact, significantly higher than it was a couple weeks ago. We'd gotten down to where this number was almost, in fact, I can kind of track it here. It was down almost into the 5% range on January 9th, 2023, and it kind of hovered in that low 6% range. And then just in the last week, it bounced back up again. So a lot of that was because of inflation. And I wanted you to get a chance to kind of share your insight, because you follow these inflation reports as well. And so let's talk a little bit about kind of what's happening with inflation. I'm going to bring up some core inflation information here, because what you were just talking to me about is really right here in this report.
Yeah, absolutely. Yeah, we had seen some progress. Rates peaked up in the 7s back in October. We've seen slow but steady progress. People get a little excited, I guess, and anxious when they hear on the news the Fed is raising rates, but they are actually trying to battle inflation, and inflation makes everything more expensive, including mortgages.
Yep.
So as they can get inflation under control, that will show progress in mortgage rates. So we had been making some progress, but then on Friday, there was a very strong jobs report. So that means, that's great for employment, but not good for inflation. When there's a lot of openings, people are willing to pay more. And as people make more, they spend more. So that pushes up inflation. Then we had our consumer price index report on Tuesday, which was about as expected, for the most part. We were hoping maybe we had some progress on that to undo what the jobs report did, but really no surprises there. We had retail sales this morning, which was actually a little more aggressive than expected. So retail sales are up, people are spending more, which again, bad for inflation. So as much as the Fed is trying to battle inflation and slow down the price increases, they're struggling because number one, jobs. There's a lot more job openings than there are people to fill them and people going out to work. And number two, spending at the federal government level. As the federal government borrows and spends, they're putting more money into the economy. That raises inflation. So, the Fed is doing their darndest to help control inflation, but then there's just things that are headwinds against them. So here's kind of the thought process. And we study this like crazy, and we have conversations with experts on a daily basis about where we are and what's coming. And nobody can say for sure. That's like trying to predict what the stock market is going to do in a month or 3 months. But the big thing with inflation is it looks at year over year figures. So if you look at year over year comparisons, you see what it was doing a year ago. So we're going to start to see some improvements. The expectation is we're going to see some better numbers for February, which comes out in March. But the real benefits are going to start to come with the April numbers, which come out May 10th. So we're going to see it probably sticking in the low to mid sixes until probably May. And then the expectation is we'll start to see the real progress starting then.
Right on.
The problem is when May hits and rates start to come down, that's going to be the heat of the busy season. So you're going to have all the people waiting for rates to come down that are sitting on the sidelines that need a house. And then they're all going to jump in, and you're going to pay way more for the house. You're going to have bidding wars because there's still limited supply. So are you going to pay 10% more for a house to save 1% in interest rate? That doesn't seem to make a lot of sense to me. That would take you, rough math, 10 years to break even. So, get your house. When you need a house is the best time to buy a house. Mortgages are just temporary. If and when these rates do come down, you can always refinance. And historically, they aren't bad. A rate in the sixes historically is pretty good. I've been doing mortgages, it'll be 29 years in April. I remember the moment rates went under 6%. It was a Thanksgiving weekend. I was visiting family. I was like, oh my gosh, we can get a rate at 5.875%. This is
stealing
insane.
money.
This
You're
is so
stealing
low.
from the bank.
Right. I was like, oh my gosh, this is robbery. So, you have to have a little bit of perspective as well.
Yeah. That is very true. I think our frame of reference here for the last couple of years has been knocked out of the normal. So we are adjusting to a new normal for sure, and that is it's this kind of struggle that we're in right now with this new normal and accepting what's there. And I think I was watching a really I'm still kind of in the middle of this broadcast I was watching this morning, which is Tom Bellew, and he's interviewing Graham Stephan. And Graham Stephan he's this young guy that's this amazing sort of savant when it comes to real estate investing. And he worked for the Oppenheim Group out in California. For anybody that follows, the Oppenheim Group was the Selling Sunset crew. But he made $1 million by the time he was like, I don't know, 20 years old or something. I can't remember the number. But anyway, he's done really, really well. And he is talking to Tom Bellew this morning about his investments. He's a very strategic investor. He's smart and he knows what he's doing, obviously. But he has a podcast that he talks about investing. He advocates not trying to time the market. He said there is it is so virtually impossible to actually, as an investor, intelligently time the market. You're going to miss it most of the time. And he kind of had this study that he talked about how a monkey is able to choose stocks as effectively as somebody who's trying to time the market. The monkey's stock picks were as good or better than the performance of somebody trying to time the market. Now, of course, he's talking about stocks there in part because he's a stock investor as well. But
Right.
Most of his wealth has come from real estate investing. He did his real estate investing starting in 2008 and had done some stuff into 2010, 2012. I think it was probably 2010, 2012 when he really got into his buying of real estate. But he came in as an 18-year-old licensed real estate agent in like 2008. It was crazy what he was doing. And the thing is that, and the point of this conversation that I'm trying to have here is that when you need to buy a home, there's always going to be people that need to buy a home. You're going to need to have a home. You find the home that you want, and you marry the home and you date the rate. How many times do we talk about that, right? So rates are going to change. It's this little bit of a wrestling match right now because we don't have a lot of homes on the market. There has been a lot of market activity. In fact, it's anecdotally showing some nice properties this weekend. Some of the properties that we were looking at were in the $500,000 range right here in Williamsburg. And as we're considering these homes, I'm getting notified by listing agents. We've already got multiple offers. We've already got as many as 5 offers on one particular home that we were interested in. So the buyer said, okay, well, probably not quite what we want to be competing against, but that's the environment we're in right now. And obviously when we have these little fluctuation in interest rates, a beneficial rate is going to help you, of course, but don't worry about trying to time the market in terms of what that's going to do for you. When you find a house, be ready to buy that house, I think is the main message here.
Yep. I'm on the Williamsburg Realtor Association Investment Committee. For the last meeting, we had our investment portfolio advisors come down and talk to us. And that's exactly what they said. And they showed example after example of markets ups and downs. And when you try to time it, you miss it.
Yeah.
So like you just invest consistently, the market will have its ups and downs, but you're not going to catch it.
Right.
But just one last thing on mortgage rates real quick. The value of points is huge right now.
Yeah. Okay. Right.
So if you're not familiar with what a point is, that's you're paying mortgage interest in advance to have a lower interest rate. So 1 point is 1% of the mortgage amount. So if you have $100,000 mortgage amount, 1 point is $1,000, 200,000, $2,000, and so forth and so on. But that rate that you showed in your example is the average rate. A point buys it down significantly right now. So, that, and it has to do with the fact that mortgage rates are on the higher side. They're expected to come down. So we're expecting people to refinance. So if you help cover more of the cost up front, then you're going to get a bigger impact in dropping your rate with that point than I have seen in a long, long time.
Absolutely. So I want to point out that this is a nice reference tool. I look at it as a reference tool because it gives me a trend, and I understand, you understand, kind of what we're looking at as an apples to apples day to day. But to look at this is not a rate quote. You would be able to provide a rate quote, which would include the opportunity to buy down that rate with points and looking at all the different loan programs. These are the averages across the market. I just want to point that out to everybody, anybody who's paying attention. These are the averages across the market as reported by the Mortgage News Daily, which is a collaborative. I mean, this is a collaboration of information brought in statistically to bring these averages. So Kevin, you're able to
people with bad credit, good credit. We're still locking in folks on a 30-year fixed conventional in the low 6s, even upper 5s. So, these are just averages across the United States. This doesn't mean it's what you will get.
Correct. I want to make sure that you had a chance to speak to that, because just because this says 6.62 today doesn't mean that that's necessarily the rate that somebody's going to get. You may be able to quote them something a whole lot better. And there's a process that applies to each individual and each loan program that you're able to get somebody into. So often your numbers are going to beat this. And this is just a simple reference tool from a day-to-day standpoint. And that's why I wanted to share that. Well, the good stuff, I mean, there's, we can't affect, these are things that we cannot control. And this is one of the things that Graham Stephan was really focusing on in his conversation with Tom Bailio this morning, is there are things that you can control and things that you can't control. The things that you cannot control are inflation and what the interest rates are today. What you can control are your actions and your decisions. If you're deciding to buy a house today, focus on that decision, find the house that's right for you, get the best loan for you at that time, and make the decision that works for you for your life. Because I have to say it, we're not promised tomorrow. And you never know what situations you may be facing tomorrow that prevents you from being able to make that strategic move. You could miss out on that house of your dreams if you wait till tomorrow. And there's a good chance that you will miss out on that house of your dreams.
And it's a good chance tomorrow it will be more expensive.
And that is absolutely the truth. We are seeing, because we're not in a declining market, we're in a stable market. And unfortunately, we're in a market where inventories are still incredibly low. So, all
And-
right.
And
All
you
right.
know what? We are already halfway through February, off and running in 2023. February's ending in just a couple weeks. February's ending in just a couple weeks, but that's okay because we'll march on.
Yeah, there you go. That's right. That's right. You know, so Kevin,
March, get it?
that
That was my dad joke.
All right. Well, you know, we're in the process of renovating a house. And the first floor is going great. But second floor is another story.
Good real estate one, but
That's a good real estate one. All right, there we go. Segue right on into the next part of our day, which means we're going to work now. So I know you got work to do. I got work to do. And thank you for watching. If you enjoyed this episode, we would love to have you like the page. Feel free to send comments. We'd love to hear feedback and thoughts on any of these videos and subjects and topics. And if anybody of you out there has a subject or topic that you would like to see discussed, we are open to that as well. So please feel free to lead your commentary. This is Kevin Onizuk with Alcova, John Polson with the Memory Group here in Williamsburg. Glad to provide you this educational information. Hope you find it educational. There's certainly great resources that are here for you, and Kevin and I are here to be a resource as well. So no obligation. If you want to have a conversation with one of us, just reach out and we will gladly help you any way we can with any questions that you have. Kevin, look forward to chatting with you again next week. In the meantime, have a great day.
You too.
All right.
Peace.
Talk soon.